Hello, so today we are going to be looking at market structure with fair value gap. Market structure with fair value gap. So what do we mean when we say fair value gap? FVG, fair value gap. FVG, fair value gap. So what is this thing? So when we are talking about fair value gap, we are talking about the way the market moves and leaves a space in between two candlesticks. So if this is the market, we have this candlestick and we have another candlestick, and there is this candlestick. So when we are talking about fair value gap, we are basically focusing on the wicks of these candlesticks. The wicks of these candlesticks. And the wicks of these candlesticks. Okay. So what we want to see in the market, we don't want to see this wick and this wick colliding. Okay, they should not meet at any point. They should not meet at any point. They should not meet at any point. There is supposed to be a space between this wick and this wick. So basically, the candlesticks which we are looking at when it comes to this, there are two candlesticks. We are focusing on this candlestick here, this candlestick here, and this candlestick here. Okay, this candlestick here. These are the two candlesticks that we are looking at. So we are not going to pay attention to this candlestick which is in the mid. We are not going to pay attention to this. We are just paying attention to this candlestick and this candlestick. This candlestick which is in between, we are not going to pay attention. So when it comes to this part where we have this candlestick and this candlestick, we are focusing on the wicks of these candlesticks, this one and this one. We are focusing on the wicks, these parts. This is what we are paying attention to. So let us go on the chart so that you have a better understanding on this. But before we go to the chart, so if the lowest point of this market is here and the lowest point of this wick is here, which means we have the fair value gap. So it means this one is going to be considered as our fair value gap. When the market closes this gap like this wick and this wick have met, which means there is no fair value gap. But the moment we have something like this, which means there is a fair value gap in between these two candlesticks. So for us to see a fair value gap between this candle, we need another candlestick here. When we have this candlestick here and it is like this, which means we have a fair value gap here. So this is what a fair value gap is. So it is a gap, a space which has not been filled by the market. It is a space like this one. So let's get on the chart so that you have a better understanding of this. So okay, let us just start from, we are going to start from here. So as the market is moving from this point, we have two candlesticks here. We have two candlesticks here. At this point, we have two candlesticks here. We are looking at this candlestick which is here and this candlestick. Okay, so where is our fair value gap? So when we are looking at the fair value gap, we have to pay attention to this candlestick and this candlestick. Do we have a space in between where the wick did not meet the other wick? Yeah, we have. So there is a fair value gap here. Okay, so after this we have this liquidity sweep. When this candlestick gave us the liquidity sweep, let me now start from this side so that you have a better understanding. When the market gave us the liquidity sweep here, we had this liquidity sweep here. After the market gave us the liquidity sweep, did we have any fair value gap here? Yes, we did. We had a fair value gap between this candlestick and this candlestick. Okay, there was a fair value gap. Okay, so for us to go to this, when we are done with this candlestick, which other candlesticks are we supposed to take a look at? We are going to pay attention to this candlestick now. Which candlestick are we going to be paying attention to it to check for the fair value gap? We are going to be checking it with this candlestick. So when you are checking a fair value gap, you skip one candlestick before or after. You skip one candlestick before or after. Okay, so this is our candlestick here. This is our candlestick here. So for us to know, to check the fair value gap of this candlestick, we have to skip this candlestick. So do we have any fair value gap between this candlestick and this candlestick? No, we do not have any fair value gap. What do? We go to the next candlestick. Which candlestick do we have now? We have this candlestick here. Okay, so for us to check the fair value gap on this candlestick, what do we need? We need to skip this candlestick and check between this candlestick and this. Do we have any fair value gap? No, we do not have any fair value gap. Okay, we go to the next one. This candlestick. Which candlestick are you supposed to check? This candlestick and this candlestick. Do we have any fair value gap? No, we don't have any. We go to the next candlestick. Which candlestick are we going to be paying attention to? This candlestick. Okay, this candlestick. We skip one candlestick, which is this one. So we are going to be paying attention to this candlestick and this candlestick. So what do we have? This candlestick, the wick of this candlestick and the wick of this candlestick did not meet. Okay, so what do we now know? So we now know that we have a fair value gap. So this is where our fair value gap is. This is where our fair value gap is. This is our fair value gap. Okay, this is where our fair value gap is. So this is how we are going to be finding fair value gap. We are now going to start focusing on the fair value gap, which is after liquidity sweep. When the market gives us liquidity sweep, then we look for the fair value gap. So this is how we are going to be moving in the market from now onwards. We look for liquidity sweep. After liquidity sweep, we look for a fair value gap once the market gives us liquidity sweep. Okay, so here we go. We have this one. Okay, what did we have? The market gave us this liquidity sweep. The market giving us this liquidity sweep, we now look for the fair value gap. Okay, where is our fair value gap? Our fair value gap is here. This is where our fair value gap is. Okay, what does it mean? It means now we can enter the market. We can at least start looking for the entries. Okay, let me just try to do something like this. Okay, so this is our fair value gap. Okay, let's keep on moving. Okay, so as we are moving down, okay, we said we are going to be looking for liquidity sweep. Once we have liquidity sweep, then we look for the fair value gap. That way it's going to be easy for you. So where is liquidity sweep? This is where liquidity sweep is. We have this liquidity sweep. After having this liquidity sweep, we have to look for the fair value gap. So we check after this liquidity sweep, we have to wait for the market to give us a fair value gap. So when we look at this candlestick, you find out that there is no fair value gap with this candlestick. So wait for the next candlestick. When we have this candlestick and this candlestick, what do you see? This week and this week, they did not meet. So if these 2 weeks did not meet, which means we now have a fair value gap. So what time are we going to know that we now have a fair value gap? When this candlestick closes. Before this candlestick closes, you are not going to know whether this is going to be a fair value gap or not. So after the close of this candlestick, where is our fair value gap? This is where our fair value gap is. Here is our fair value gap. This is our fair value gap. Okay. So what did we say? We said we need the market to give us a sweep. After giving us a sweep, we look for the fair value gap. We keep on moving. So the market gave us a breakout here. Okay. Gave us a breakout here. After giving us a breakout here, we do not have any fair value gap around this area. So we come at this area. So what are you seeing here? There is no liquidity sweep that we are seeing here, but I'm just showing you where the fair value gap was. Okay, this is where we have our fair value gap. It was created here. Okay, you see? So why do I say this is a fair value gap? If you look at this candlestick and this candlestick, there is a gap in between, which gives us this fair value gap. Okay, let's keep on moving. We have this. Okay, we have this sweep here. We have also this other sweep here on top. And what do we have after that sweep? We have this fair value gap here. This is your fair value gap here. This is your fair value gap. So some of you are using strategies which are using fair value gap. So this is how you find the fair value gap. You just look for 3 candlesticks, then you just look for one candlestick which is in between, and the other candlestick, the wicks should not meet at any point. So if you look at this, we do not have any fair value gap here. Why? Because the wicks have been meeting. Okay, the only fair value gap which we have here is this one. Okay, this is the fair value gap which we have. Okay, after this we do not have any other fair value gap. Okay, we have another fair value gap here. You have another fair value gap here. Okay, so we are here. We said we look for liquidity sweep. Once the market has given us a sweep, we look for the fair value gap. Where is our fair value gap after this sweep? It is here. This candlestick and this candlestick gave us this fair value gap. Okay. So you should always remember to always pay attention to the fair value gap, because this is where you are going to be making many of your trades. Like, your point of interest is supposed to always be towards the fair value gap. So this was another fair value gap here, buy side fair value gap. Okay, buy side fair value gap. Okay, but we have only talked about the sell side fair value gap. So this one also, this is a fair value gap. Okay, this is our fair value gap. So we have liquidity sweep, we have this fair value gap. This week and this week they did not meet. This week and this week they did not meet, giving us this fair value gap. Okay, so we have another liquidity sweep here where the market gave us this sweep. Okay, after giving us this sweep, we need to wait for the market to give us a fair value gap, okay, so that we can think of entering the market in a proper way. Do we have any fair value gap here? No, there is no fair value gap. There is no fair value gap. There is no fair value gap here. Nothing. There is no fair value gap here. There is no. At last we have a fair value gap. This is where our fair value gap is. This is our fair value gap. Okay. Okay. So once we have this, we can properly think of entering the market. Okay, so this is our fair value gap. How is it our fair value gap? Because this week and this week they did not meet in any way. And after this sweep, which other fair value gap do we have? We have this fair value gap here. We have this fair value gap here. This is our fair value gap here. Okay. This is our fair value gap. Where is our other fair value gap? It is here. Okay, it is here. It is here. This is our fair value gap. Okay, where is our other fair value gap? It is here. It is here. This is our fair value gap. This is our fair value gap. Okay. This also is our fair value gap. This is our fair value gap. Okay, we keep on moving. So we said we are focusing on the fair value gaps where if the market gives us liquidity sweep, after giving us liquidity sweep, that's when we look for the fair value gap. So we have this liquidity sweep. Where is our fair value gap? This is where our fair value gap was. 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 Okay, so we had this pullback. We have to take a look at the fair value gap as the market was giving us a push to the upside. Okay, so we had another fair value gap here. We had another fair value gap here. Okay, so this is how you always find your fair value gap. Okay, you just look for where the market did not give you a meet of two candlesticks of the wicks of the candlesticks. Okay, so we have a sweep here. We have a sweep here. Where is our fair value gap after this sweep? So if you look at this, we have this candlestick and this candlestick. So this candlestick and this candlestick, what do we need for us to know that, okay, there is a fair value gap? This week should not meet with this week, which means we have a fair value gap. A fair value gap. Okay. A fair value gap. Why do you need to learn the fair value gap because they will help you when it comes to point of interest. When you have a point of interest which has a fair value gap, it has more probability of working out than a point of interest which has no fair value gap. This is our fair value gap. We have the liquidity sweep, we have the breakout, we have the fair value gap here. Okay, the market keeps on moving. Okay, what do we have again? We have this liquidity sweep. After liquidity sweep, we have this breakout. What do you have now? Here, you have this fair value gap. You have this fair value gap. This is what you have, the fair value gap. Here, you have the breakout here. Clean breakout. Okay, so here we have no fair value gap. The market gave us a sweep here. Okay. After giving us a sweep, do we have any fair value gap here? No, we don't have any fair value gap. Where do we have our fair value gap? We have it here. Okay. We have it here. This is where we have our fair value gap. Did the market give us a pullback to this fair value gap? No, it did not. It's continued to move. So as the market kept on going upwards, what do we have? We now have this fair value gap here. This fair value gap here. So instead of the market coming to react to this fair value gap, the market reacted to this zone here and gave us a pullback to these zones. Okay. So we had another fair value gap here. Okay, so what do we have now? We have a breakout here. After a breakout, what do we have right now? Okay, there is no fair value gap between these two. There's no fair value gap. What about this candlestick and this candlestick? We have a fair value gap. It is here. Okay. This is your fair value gap here. The market continues moving upwards. So, do you have any fair value gap here? The only fair value gap we had was this one here. Okay. So after this, what do we have? We have liquidity sweep. After the market gave us liquidity sweep, what do we have now? Here are the fair value gaps that we have. We have this fair value gap here. We have this fair value gap here. We have this fair value gap here. And we have this fair value gap here. So all of these are fair value gaps. This is a fair value gap, this is a fair value gap, and this is a fair value gap. So once you have fair value gaps like these ones, it is also important that you check the point of interest on the higher time frame. So you don't just use the point of interest just on that particular time frame, but you also have to make sure that fair value gap is in line with the higher time frame. So let's go back to what we were talking about. We said when we are looking at the fair value gap, we are supposed to see 3 candlesticks. Okay, 3 candlesticks. To be in particular, we are going to be focusing on only 2 candlesticks. So what we have liquidity sweep here. The market took out liquidity at this point. After taking out liquidity, we have to wait for the market to give us a fair value gap, which is this one. Why do we say this one is a fair value gap? We are saying that this is the fair value gap because this week and this week they did not meet. They left this space. This space was unmitigated or unfilled. Okay, so there is nothing here. There is nothing that the market did at this particular point. So this is why we are having something like this. Okay, so after having something like this, we already know to say, okay, for the market to give us this, which means a lot of sellers have entered the market. Okay, so let's go to the next fair value gap. So this is the next fair value gap which we had. So on this fair value gap, what did we say? We said that we have to see 3 candlesticks, and the candlestick which is at the middle is literally doing nothing, but we have to make sure that we look at the wicks of the wicks of the other 2 candlesticks. We have to make sure that these wicks, this week and this week, they do not meet. Once they do not meet, which means there is a fair value gap. Okay, so this is why we had this fair value gap. So we keep on moving. Okay, so this is the other fair value gap that we have. It is here. What do we have here? We have this week which didn't meet this week. Okay, so since this week didn't meet this week, we know that this is a fair value gap. The market did not touch this point. This point is unmitigated. There is nothing. It is still fresh. So when you look at all these candlesticks, you find out that this week is meeting with this week. This week is meeting with this week. This week is meeting with this week. So everything here, there is nothing here. There is nothing. You don't have any fair value gap here. So even when you look at this point from here where we have the fair value gap, this is what you have to be observing. When you look at this week and this week, they are meeting. This candlestick and this candlestick, they are meeting. Okay, so when you look at this week and this week, you find out that they are meeting. So there is no fair value gap. When you look at this week and this week, they are meeting. There is no fair value gap. When you look at this week and this week, they are meeting. These bodies, they are meeting. There is no fair value gap here. So when you look at this candlestick and this candlestick, you find out that this candlestick and this candlestick, they are meeting. This week and this week, what are this week and this week? What is there? They are meeting. So there is nothing. There is no space. There is no space here. Every space has been filled. There is no space here. So when there is a space between 2 candlesticks, the wicks did not meet, which means we now have ourselves a fair value gap. So here you can't say that there is a fair value gap here. You can't say there is a fair value gap. Why? Because this week and this week have met. So all orders have already been filled. Everything has been filled. When you look at this candlestick and this candlestick, the wicks have met, so there is nothing. You don't have anything. So the time that you're going to have a fair value gap is when there is space. Okay, there is space. There is space. Okay, there is space between 2 weeks. This week and this week, there is space. Once there is space, which means we have a fair value gap. Okay, once there is no space, like this candlestick and this candlestick, there is no space, so which means all orders have been filled. Look at this candlestick and this candlestick, they have met, so there is no fair value gap here. Nothing is there. Okay, so all orders have already been filled. So this is what you should be paying attention each and every time you're looking at the market. When you're looking at point of interest, the fair value gap is very important because it is going to guide you to check on which supply and demand is actually going to work out, or which supply and demand which is very strong. Just look at this. Look at this. What happened? When you look at this point of interest, what are you seeing here? There's a fair value gap here. There's a fair value gap here. Okay, there's a fair value gap. Even though the market gave us this pullback, even though the market gave us this pullback, even though we have this pullback, the market could still not break out of this structure. Why? Because there is this fair value gap here, which is showing that the sellers have entered the market. If you look at this, why didn't we use this and had to use this? So it's because this one has a fair value gap and the market has given us a breakout. So the probability of the market going up is very high. So it's the same thing even when it comes to here. To this part. Okay. Why is it that this supply is on? This supply is on. Why is it that it worked? It is because of these same fair value gaps. Okay. It is because of these same fair value gaps. Okay. Why is it that this supply also worked here? This supply is on. Why did it work? Why did this one work? It is because of the same thing here. Which thing are we talking about? The fair value gap, which is here. So it is not every fair value gap which you are supposed to use, but once you start to understand the way the fair value gap are used with the point of interest, it is going to be something which is going to be very helpful when it comes to market analysis. So go through the charts and start looking at the fair value gaps. Just get to understand the fair value gaps. You should just be able to see, without you even having to analyze the market, you should be able to know that this is a valid fair value gap, this is not a valid fair value gap, or this is a fair value gap which can be used. And remember, I said something that you always have to pay attention to the fair value gaps which are created after the liquidity sweep and after the break of the structure or breakover or change of character. That is the best fair value gap you can ever use when the market has already given you the direction. So you just use the fair value gap as a way to enter the market. Okay, let's just take a quick look at this. The market gave us some liquidity sweep here. Okay, the market gave us the liquidity sweep here. After giving us this liquidity sweep, what did the market do? It gave us the breakout here. Okay, gave us the breakout here. After giving us the breakout here, we also have seen this. There is another breakout here. So what do we have here? Here we have the fair value gap. After having this fair value gap, we know that the direction has changed. We are in a downward direction. We are going downwards. Okay, we now know the direction has been confirmed. We are going downwards. Okay, this is where we are going. So this is how you use the fair value gap. This is how you use the fair value gap. Once you know that we have liquidity sweep, we have the breakout, we have this fair value gap, you are free to enter. Even this one, it is still valid. Though you already know that the market is already in a downward direction, we understand that the market is not going to reach this level. Why? Because the market has already swept liquidity. There is no reason for the market to come to these levels. Though in some pairs or some circumstances, you find out that the market would still come to these levels and go down here. Otherwise, this is the fair value gap. So just go through the charts, just take a look at where the market gave you liquidity sweep, like here it gave you liquidity sweep and the breakout. You just look for the fair value gap. After finding the fair value gap, just know that that's your point of interest. When you use with the Fibonacci retracement, it even makes up a very good combination. So that's it with the fair value gap.